has the opportunity. Yeah, absolutely. Well, let's pivot back to Rob a little bit. Forrest and I tend to talk a lot.
Overpower things.
You know, him more than me, by the way.
This is our first special guest, and we
I'm
get
shocked.
Rob
That's a
talk for a
shocking-
few minutes.
You never
and then-
called me in the doctor's office.
Oh, that's funny. But yeah, let's talk about like where do you see the market going between now and like the first quarter next year? Do you ever have that crystal ball?
Yeah,
Rob?
it's polished up. I left it in the car. We've been waiting for a decline in rates. I think, depending on who you talk to, and we participate in a lot of podcasts and a lot of, experts in the market, and it's taken longer than expected. But I think there's a general agreement that we should see a slightly lower rates before the end of the year, and then potentially lower further in 2025. Now, is that going to be 4% or 5%? I have no idea. I think it will be lower. I mean, I would like to think we might break 6%. But again, if you go back and look at those statistical numbers, if we could do 5.99 or 6 for 10 years, the market adjusts, everybody adjusts. We come up with products and ways to deal with it. When these rates shot up close to 8, we started doing temporary buy downs again, which is something we did back in the 80s when rates were 13. When I started in the mortgage business, the VA rate was 18%. And so we had to come up with ways to manage that. Now you'll say that, the house was $88,000, and that's a fact, but the wages and everything is not kept up with the rise in rates or prices. So we start doing temporary buy downs again, which lowers the rate for the first year, and then it bumps up 1%, and maybe it bumps up a second time. But you get in the game, you get in early at a more affordable payment. Because one of the things that we used to talk about is how long will you keep this house? And I think the average, you guys would know better than me, but somewhere around 7 years that an average, first time especially,